Hi, and good morning. Welcome to today's edition of the market analysis pre-market for today, Monday, the 19th of September. Well, let's begin the week's commentaries. You know, Obviously, we're going to be seeing the Fed's rate hike. Uh, that could probably be more pain coming in on Wednesday. The Jerome Powell next steps on the Federal Reserve money tightening policy should be harder as the economy is starting to show the impact of the central bank's rate increases to curb consumer demand and rein in inflation. The Fed is going to announce its monetary policy decision on Wednesday. Manufacturing is slowing and retail sales are softening amid high inflation rates, while the labor market remains nearly as tight as ever. New jobless claims fell for the fifth straight week, and the insured unemployment rate has fallen below 1%. Powell has for weeks emphasized that the Fed knows its actions will spark a painful fallout, but he also says that not reining in inflation now will only cause more pain in the future, and the Fed won't be deterred from its goal of bringing inflation back down to 2%. On that note, meanwhile, the U.S. dollar index is obviously growing, getting stronger, is up 14% in so far this year. It's on track for its best year since the index began in 1985. Currency like the euro, Japanese yen, British pound, as well as some emerging market currencies such as Hungary's forint are getting battered. And it seems as if everyone is afraid of the Federal Reserve meeting this week. U.S. stocks futures were down, and the S&P has dropped almost 6% since the disappointing inflation report from this past week. Now, investors shouldn't fret too much, though. Surviving the Fed week is a simple task. For starters, don't get your hopes up. The Fed funds rate is going up, probably by another 0.75%, putting short-term U.S. lending rates at 3.25%, levels not seen since 2008. Hopes for a lesser increase went by the wayside after that inflation report. Next, don't focus on the headline rate increase. Rising short-term rates don't mean all is lost for the economy or for stocks. Longer-term rates matter more. Instead of the Fed funds rate, focus on moves in inflation expectations and longer-term bond yields, such as U.S. 5-year and 10-year treasuries. That can give investors a sense for what real interest rates will do. Real rates are essentially the interest rate paid less inflation. Higher real interest rates are really what slows the economy and depresses stock valuations. Right now, inflation expectations are about 2.4% a year, and the U.S. 10-year Treasury yield is roughly 3.5%. That yields a real rate proxy of about 1%, up roughly 2% points so far in 2022. If that calculus doesn't change in the days or weeks following the Fed, it is a sign investors have some confidence the Fed has controlled the situation. Third, don't get greedy. The Fed might not get things exactly right. The central bank is raising rates while FedEx, for instance, is warning of a global slowdown. Reason for caution, but let's see. Let's point out that the S&P 500 has been below its 200-day moving average for 112 consecutive days. And trend like that typically means the market is headed for lower lows and lower highs as it bounces around. So staying conservative with a little cash on the sidelines is probably prudent. And with that being said, let's take a look at what we can see in the markets today. So we're seeing that the markets could probably have much more to fall, to go lower. I'm looking right now so far at 11,700 for the support level for today. If we were to break this, I'm looking at 11,500. All right, so we'll be bottoming out at 11,000. Well, we gotta obviously wait and see if that happens. On the S&P 500, I have my support at 3,800, resistance at 3,900, 3,910. Now let's take a look. Let's work with crude oil. I'm having the $80 mark for crude oil. Remember that last week President Biden said that they need to replenish the inventories out of the Special Reserve Petroleum, their SPDR. So they need to replace that inventory, and they will replace that when they see crude oil around 80 or below. So I have 80 as my support. I'm gonna bring down my pivot point to 84, and I'm gonna bring my resistance right to 88, around that level. Okay, then we have here the Nat Gas. Let's just give up at those levels. I'm gonna be using this low 7 as my level 4 support, psychological level. Okay, let us get the some more of the information about our. We're gonna be looking at the levels for natural gas. So we have our support. Let me clone this line, get my pivot point, which will make it 799. My pivot point 7933. All right, now we're gonna clone that one, and we're gonna give it our resistance value, which will be 815. That will be, those are our levels for today for Nat Gas. Now let's take a look at gold. Gold, we're gonna put this low right here, and we're gonna clone this line, and we're gonna clone this one as well. I'm gonna change this color. I'll change this color. All right, and let me see. We're gonna be doing September contracts for gold. So I have my support 1650 rounded, right? And our pivot is going to be 1666, and then our support 1680. 1680 done. Okay, so we have that. Now we're gonna do silver. Silver has really sustained its valuation. It's holding around $19, much better than what gold is doing. Gold is just taking a beating, really, due to the strength of the dollar index. A lot more people are flocking to it. Now they're using it as a haven currency. So that's basically why all this geopolitical uncertainty that is continuing. So let's see, we're gonna have the support at 1860. No, 1880. Yeah, 1880. Here we are, support. And then our pivot. Our pivot is 1917.9. And then we have our resistance at 1980. 1980. There we go. All right, now this one is copper. Let's use copper. Let's find out about copper. All right, so our levels for copper are gonna be this one right here. We're gonna do support is gonna be at 349.80. All right, I'm gonna clone that one. Actually, we're way below that. We can't use that one. We gotta use something lower. I'm gonna use 340. And then we're gonna clone that. and give more of a pivot point, the color of it. I'm gonna do the pivot. The pivot is gonna be 353. All right, and now we're gonna be doing this 350. Yeah, 355, 59. That's it. That's our levels for today for copper. Bitcoin has really been taking it in the shin, along with the Nasdaq. That correlation between them two is really evident. It's visible. You can see that big correlation. So we're gonna be using 18,000 as our support, psychological support level, and then we're gonna be using our pivot 350. Let's see. All right. So 19,745, and then we're gonna do the resistance. This resistance is gonna be giving us for today. Not much really. So it's gonna be 19,971. 19,970. All right. Now we have the euro, and the euro is really just trying to really sustain itself, trying to get back above parity or up to parity, but it hasn't been easy with the ECB doing what they're doing, following suit, raising rates. They need more than that to obviously be able to sustain this fluctuation. I'm gonna leave my pivot at 1. No, obviously that's what the market is looking to come to. And I'm gonna put my resistance at 101. Market first gotta come to it. And then we have the dollar index. This is really just a strong dollar, and it's gonna continue to be so. We're gonna put 110 as our resistance. Okay, those are our levels for today, guys. Hope you have a nice trading day, and I'll talk to you later. Good day to you.